This could be the worst time in the cycle to sell your crypto, so I hope you're not. Bitcoin's hovering right around $100,000 at the time of this video. And we've even seen it dip under 100,000 a little bit, just for a moment. And this got headlines screaming, it's over. We've even seen altcoins are red across the board. Traders have been panicking and the market looks broken. But what if this is the exact setup? The pressure, the fear, technical analysis, macro events. What if all of this combined creates the setup for the signal we've been waiting for? Because every time Bitcoin's touched this level before, conviction got tested right before the market accelerated into its next major move. So in this video, I'll break down the most powerful signals that point to Bitcoin sitting right on the edge of its next big leg higher. And happy Saturday, everyone. I'm so sorry I didn't come to you yesterday. Had some technical issues. The point is I'm here now. So let's get started. Let's start with the backbone of Bitcoin's trend, the 50-week moving average. Think of it as the heartbeat of every Bitcoin cycle, the line that separates emotion from reality. And right now, at the time of this video, Bitcoin's sitting around $100,000, brushing right against that 50-week trend line. And every single time this has happened in previous cycles, it became the launch pad for the final rally. Now, this is pre-recorded, so I don't know exactly where this week will end, but I know how we end next week through November 17th decides everything. If we hold that line, that's the confirmation signal we need to be looking for. Now let's check the sentiment. Right now, the fear and greed index is sitting around 20 to 25, deep fear territory. And historically, that's where the strongest entries have appeared. So technically and emotionally, this is a reset moment. But to see why the setup is lining up across the board, we need to zoom out to what actually drives these cycles, and that is liquidity. Every major crypto rally begins with one thing: liquidity turning back on. And that's exactly what's happening behind the scenes. So let's break down the machine in plain English, understand the mechanics, what's going on. First, we have the reverse repo. That's where banks park extra cash at the Fed for risk-free yield. And over the past year, that pile dropped from about 2.3 trillion to almost zero. It means the safety bucket is empty. Banks have already pulled that liquidity back into the system. Next, the TGA, or the Treasury General Account. That's basically the government's checking account. And during this shutdown, money has been piling up because the government has kept collecting taxes, but it hasn't been spending. So when this shutdown ends, and it will soon, that cash flows back into the economy. That's new liquidity we will be seeing. And finally, the big one: the Fed's balance sheet. And we know the Fed ends quantitative tightening on December 1st, at which point, after that, they'll start rolling mortgage-backed securities into treasuries. That's stealth quantitative easing. The same move they pulled in 2019 when the repo market crashed, and the Fed had to quietly add liquidity to keep the system from freezing. So if you overlay that setup on the 2019, 2020, 20 period, it's almost identical. Back then, that pivot kicked off Bitcoin's run from $7,000 to $60,000. We're looking at that same setup again: tight credit, a drained repo facility, and a Fed about to reverse course. And the crazy part, hardly anyone's talking about it. Now, here is where it gets wild. If you think this is just a crypto story, take a look at the global business cycle. In this chart, we can see the business cycle mapped against momentum. Every time momentum started pushing higher, while the global cycle flattened, like in 2016 and 2020, the market went parabolic right after. That same setup is forming again right now. Momentum is turning up while the broader economy is still dragging its feet. That's the quiet macro signal that liquidity is about to flood back into the system. And guess which asset feels it first? Bitcoin. Always Bitcoin. All right, let's switch gears for a second. Forget the dollar for a moment and look at Bitcoin priced in gold. This chart shows something most people overlook. Every time Bitcoin's ratio to gold dropped into that lower green zone, it marked a generational buying point. You can see it 2015, 2019, 2022. Every single time that zone was the bottom. And measured against gold, Bitcoin is sitting at bear market levels right now. That means you're paying 2022 prices in real asset terms while global liquidity is about to expand. Gold is already leading, and Bitcoin usually follows within about 8 to 10 weeks. They move together because both act as monetary hedges. Gold reacts first, and then Bitcoin accelerates after. So when people claim Bitcoin looks overextended, this chart tells a different story. It shows Bitcoin is undervalued in hard money terms, the cheapest it has been since the last liquidity cycle reset. So if you are here and you can buy some more Bitcoin, it's not financial advice. I'm not allowed to do that. But that is what I would tell my friends and my parents. Well, I tell my mom. Now let's talk about what happens next. Rotation. Right now, Bitcoin dominance sits around 61%. That's elevated, but not historically extreme. Take this analysis from Colin, a top market analyst. In both 2017 and in 2021, the final Bitcoin top didn't appear until dominance fell below 49%. That drop kicked off alt season. When dominance declines, capital begins rotating out of Bitcoin and into everything else. We're talking Ethereum, Solana, AI plays, gaming tokens, the whole wave, and all the new narratives. Just remember to never allocate more than you can afford to lose into all of the super degen narrative plays. And here's the key point. We're not there yet. The dominance breakdown that defines that final phase hasn't happened yet. So Bitcoin still has room to run before rotation even happens. So if you're seeing headlines saying and screaming, it feels, this cycle's over, the dominance data tells a very different story. It's still early. All right, so now that you know when rotation starts, let's talk about why altcoins follow so aggressively. It all comes back to global liquidity, which is basically how much money is flowing through the world's biggest financial pipes. When central banks start expanding again, that extra capital moves through every part of the financial system, and crypto reacts fast. I'm talking about the Fed in the US, the European Central Bank, the Bank of Japan, and the People's Bank of China. These are the four engines of global money supply. Remember that. When they ease policy or inject liquidity, markets across the world respond. And very often, crypto moves first. Historically, when their combined liquidity turns higher, altcoins outperform Bitcoin almost immediately. That relationship has held true for nearly a decade. And Ethereum's already been quietly leading Bitcoin for 6 months, just like it did before the 2021 run. And when Ethereum starts outperforming, the rest of the market usually follows. The setup's already forming too. We just need the liquidity engine to flip on, and that switch gets pulled when quantitative tightening stops on December 1st. So until then, you just have to hang tight. That's when you'll feel it. Faster moves, broader participation, and volatility that finally rewards your conviction if you hang tight. So as we close out today's video, at the time of this video, remember, Bitcoin's hovering around 100 grand, sitting right on its long-term line while fear sits in the low 20s. Liquidity is about to turn on, the Fed's pivoting, global M2 money supply is climbing, and gold's already leading that move. We also see, measured in gold, Bitcoin's still in accumulation territory, a setup that's marked every cycle bottom since 2012. The data points in one direction, and that is expansion. The system's reliquifying, if you can put it that way. This is the moment in every cycle when conviction feels hardest, heaviest, and rewards, and the light at the end of the tunnel feels so far, far away. But this is normal. And as long as you know and can identify what you're going through, then you can be more objective about it. This is the shakeout before the run. So don't sell your Bitcoin, don't sell your Solana, don't sell your SUI, don't sell all the blue chip tokens I've talked about in my videos. If something happens to any of them, I will cover them. But in the meantime, hang on to your investments. especially Bitcoin. I love you guys so much, and I'll catch you guys here on Monday. Ciao.